So, one of my coaching students asked me a very interesting question today when I was taking the class. And he said, Rohit, why have you placed market criteria as fifth selection criteria? Why not keep it first? Because he said that if the market is in a confirmed downtrend, anyways, we are not going to buy any stock, right? So, why do you waste time doing liquidity, comparative, technical, and fundamental analysis when we already know that the market is going to be in a confirmed downtrend? And I want to answer this question in this video. This is a very important video because if you see this diagram, this is not just a framework, it's a flow chart. Okay, so you start with filtering stocks. There are more than 5,000 stocks in the Indian stock market. So, first you have to filter. So, after you filter, you will get a filtered list of stocks. That filtered list of stocks will go through these five steps. So, liquidity first, comparative, technical, fundamental, market, then position size, then execution, then risk management, and then trade management. So, it's a flow chart. Okay. Now, which means if a stock does not meet some of our basic liquidity criteria, we will not even get into comparative analysis. So, for example, if the stock has a red flag, I will not even do comparative analysis. Similarly, if the stock does not meet some of our basic comparative criteria, so if the relative strength of the stock is 67, okay, it doesn't meet the basic criteria of minimum relative strength of 70, right? I wouldn't even bother doing technical analysis. Similarly, in technical, let's say there are only 7 candles in the base. We need minimum 10 candles in the base. So if there are only 7 candles in the base, or if the stock is not in a stage 2 confirmed uptrend, I would not even bother doing fundamental analysis. Now, from fundamental to market, there is an exception here. If the stock is fundamentally weak, I could go to the next step because I might take it as a swing trade. Okay. The difference between swing and positional is in positional we give more weightage to fundamentals. In swing we give less weightage to fundamentals. Coming back to the question that my coaching clients asked me is that why would you keep market conditions after fundamental? Why not keep it before liquidity? So that when the market is in a confirmed downtrend, we don't even bother doing all the other four kinds of analysis. Very interesting question, right? Let's say we keep market before liquidity. So if the market goes into a confirmed downtrend, okay, and if it remains in a confirmed downtrend for the next 3 months, it means for the next 3 months, you will not even look at the market. You will not even look at what is going on, right? That is what is meant with that question. I don't want you to do that. I want you to do this entire process on a daily basis, irrespective of whether the market is in a confirmed downtrend or not. And I will tell you why I say that. What is the benefit to you? What is the advantage to you of doing that? So, when you are ignoring market conditions and you're just running through this process every single day, okay, you know what happens. Have a look at this. So, this is Market Smith homepage. You go to the breakouts, you already have your filters set. Some people were asking me, Rohit, can you explain the filters? I will do it maybe tomorrow or day after tomorrow, make a separate video on that. But if you have a look at this, there are 23 stocks coming in my filter. You know, 3 months ago or 4 months ago, there were more than 100 stocks showing up in this same filter. Okay. After 100, it came down to like 97. After 97, it came down to something like 83. From 83, it suddenly dropped to 67. From 67, it went to 45. From 45, it went to like 32 or something. Then from 32, it went to 27. From 27, it dropped all the way to 15. From 15, it dropped all the way to 7. This was what I was observing when I was looking at this number on a daily basis. Now, what does that tell you? Like if a stock goes, if the number of stocks in my filtered list goes from more than 100 to less than 10, what does that tell you about the market? It does not mean that the market is bad. It simply means that overall, in the broader market, there is weakness because this filter is applicable on all the five stocks, 5,000 stocks listed in the Indian stock market. So the number of stocks reducing in this filter daily gives me a feel of the market. It tells me that overall in the broader market, not just the index, overall in the broader market, there is weakness. Okay. So I get a feel of the market without even looking at the chart of Nifty. Okay. Normally, Market Smith comes up with market conditions based on the chart of Nifty. But if I am observing every single day that the number of stocks coming up in my filter are reducing, that is called weakness. Probably the reason why they are reducing is because of the 50-day simple moving average. I will never buy a stock which has closed below the 50-day simple moving average. So when the broader market falls, most stocks will break their 50-day simple moving average very fast. That is why that number keeps on reducing. Correct? So just by looking at this number on a daily basis gives me a feel of the market. I don't have to look at the index to determine what the market is doing. So this is a very objective way of understanding what is going on in the stock market. One important point I would like to mention here is you can't change the filter. See, the numbers that I told you from more than 100 to 7, it is assuming that you don't change the filter. Okay, if you keep the filter constant, only then this system will work for you. Okay. Now after 7, it went to 9. From 9, it went to 12. Then after 12, it went to 17. Now it sits at 23. What does that tell you about the market? It tells you that the broader market is probably recovering. There are 10, 15 stocks that are coming up above and closing above their 50-day simple moving average, which means they are in the process of forming a base. Okay. So if you see positive action on the Nifty and that coincides with a lot of stocks coming above their 50-day simple moving average, trying to form a base on the right side, that is a positive sign. Correct. So that is the reason why I have kept market condition as fifth task to be done. If I keep market condition here, you will just sit there, do nothing, you will lose touch of the market. If you don't look at the market for 3 months, you will not understand what is going on underlying or what is going on behind the curtains in the stock market. There are 5,000 stocks listed in the stock market. Imagine doing daily scanning. Imagine scanning the market on a daily basis. It gives you a feel of the market. It's like if you watch the news on a daily basis, let's say for 1 hour, your general knowledge will be very good because you are up to date with what is happening. You are watching 1 hour of news daily, that is good for you, right? Provided the news is told in a way that is like storytelling, it is conversational, right? So that it sticks. You learn something from it. And if you continue to do it daily, you will always remain updated on what is happening. At least if you watch the news related to your own industry rather than watching general news, why not watch news which is related to your own industry? Why not spend time there? You will be up to date with what is happening in your industry. Similarly, in the stock market, if you do scanning daily, irrespective of whether the market is in a confirmed downtrend or not, I think it will help you. It has helped me. I don't need to look at the Nifty or the Sensex chart daily to know whether the market is doing well or not doing well because I am not restricting myself to Nifty 50 stocks. For me, the stock market has 5,000 stocks to choose from. That's my universe. That's the universe I want to focus on. So that is the answer to the question. Remember, this is not just a framework. Okay. It is a flow chart. You might think that it must have taken me 5 minutes to prepare this slide. It did not take me 5 minutes to prepare this slide. It took me 5 years to prepare this slide. It has come from experience. Whether you look at William O'Neill, he uses this system. Whether you look at Mark Minervini, he uses the same system. David Ryan, Patrick Walker, Mark Ritchie, everybody uses the same system, but they don't call it this way. They don't look at it this way, but at the end of the day, if you see what they're actually doing, they are simply following this system. I have just simplified everything for you. You will notice that I have been showing you this diagram almost in every single video, because this is it. There is nothing beyond this. Okay? Thank you so much.